Welcome back for another episode of Monday Morning Markets. As always, we're joined by Jeff Peterson, who is the president of Heartland Farm Partners. Jeff, today some of our producers watching may be sitting in a grain elevator delivering some of that grain into town. So we want to kind of dive into that topic a little bit and talk about some of those factors to consider when hauling grain into town, specifically unsold grain. Let's start there. And what do producers need to be thinking about?
Yeah, I think there's a couple things that we always want to think about when we're dealing with those unsold bushels. Is that the first of all gets to be on the discount schedules. There does get to be some differences. So as you're thinking about what that bid is at your local buyer, keeping track of what they're going to charge you for moisture and also what they're going to do on any of those discount schedules is important, because maybe your best bid isn't necessarily the one with the highest price. The other thing is ultimately gets to be, what are your contracting alternatives once you get to that elevator?
You mentioned discount schedules. How different do those vary from one elevator to another?
Early in the season, there could be some big differences. For instance, if someone needs corn really bad, you could have it to where they are just shrinking those bushels on the corn side. And normal shrink coming out of the fields about 1.2%. Per point of moisture, and so they might be charging 1.5%, but you'll generally see some differences on the moisture side. Everything else really doesn't come into play or change too much, and it's usually not that big a factor.
Well, Jeff, let's talk about some of the differences in terms of contracts that are available out there for unsold grain at different buyers.
You know what? You run into a full range there, because you do end up having, if you're coming in at those unsold bushels, the first thing you have to kind of think about for yourself is that, what's your opinion on the market? Are you looking for somewhere so you can hold on to the bushels and try to get a higher cash price down the road, or are you looking for somewhere to get some better basis? And that really kind of opens up, what you're focusing on for those contracting alternatives. So here's what we could find. We could end up finding some buyers that just when you haul it in, you're physically going to have to sell it. And then the next thing we have after that gets to be ones where, you may want to hold on to those bushels, but they're going to charge a storage fee or delayed pricing fee that's going to amount to multiple months. So it could be 2 or 3 months. So for instance, you could have a situation where they might say, if you want to hold on to these beans, it's going to be 25 cents a bushel to get to January 1st. But then you get to some others that are probably a little bit more friendly on that, and they might just charge 5 cents a month, and they might prorate it daily. So you got to really watch there. But the other difference we run into, if you're thinking about just holding on to the bushels for a higher cash price, is that, do I want to go storage or do I want to go delayed pricing? And really for most producers, that really doesn't matter. What you should focus on there is that which one is going to be a little cheaper, and delayed pricing is a little cheaper usually. The other thing you come into play there is that ultimately, usually at delayed pricing, they're just going to bring the moistures back to the 15% on the corn and 13% on beans. But if you decide to go storage, they may actually want to take it all the way back to 14.5 on corn or 14 on corn. So they may want to go ahead and shrink it additionally. The other thing we want to think about is that if you're friendly on basis, and we are friendly on basis, we think post-harvest we're going to see basis improve. One of the other things to think about is that if you bring your bushels in and put it on a delayed pricing contract, at some point down the road, if you want to set the basis on that, will that go ahead and stop the delayed pricing charges? Most grain buyers that will do that, but it doesn't necessarily happen at all of them. So those are some of the common things that you're physically looking for on the different contracts price.
Well, let's talk about the factors influencing the commodity trade right now, Jeff. What do you see in terms of corn and soybean momentum right now?
It's really an interesting dynamic market, and I think right now we'd have to say that the market is really focused on yields. And in kind of what you've got, the situation in the Western Corn Belt, yields are probably just a little better than expected. You go over to the Eastern Corn Belt, though, they probably, because of some disease problems they had, an early dry down and lack of moisture right at the end, they probably aren't quite as good as what they're expecting. So yields are a big one. The other big item that's getting a lot of talk is China. Is China going to step in, especially in the soybean market? And are they going to buy soybeans like what they've done in the past? Because right now, when we look at the numbers, their sales so far year to date, and keep in mind that crop year started on September 1st, they're down a little over 30% compared to a year ago. And when we look at our export inspections, how quickly is stuff getting shipped out, that's down over 70% compared to a year ago. Now, we think a lot of the slower shipment is because of the problems because of Hurricane Ida that happened down at the Gulf, but everybody's kind of questioning what's going on with China in regard to their purchases of soybeans.
Certainly something to keep an eye on, Jeff. Of course, this week we've got the typical reports coming out just this afternoon, crop progress, getting up and how harvest is going, but this week we also have a WASDE coming out. Talk about if you're expecting any surprises from that report.
There is some surprises, and if there would be a surprise, we'd probably expect it on the yield side. So as we kind of walk through, in the September WASDE report, 176.3 is what the corn number was. And when we look at the Dow Jones estimates, the industry is expecting 175.9, so a little bit smaller yield on the corn side. You go over to the soybean side, though, and in the September WASDE, 50.6 was the yield. 51.1 is what the expectation is. But I think the trade is bracing for probably even a little bit higher number than that. And then when we walk on over to production, because we have to then wrestle with, okay, what does that yield do? What do the acres do? And what we're looking at there is we're actually looking at that corn production number. It's going to come down. The average guess is about 48 million bushels. Bean number comes up about 35 million, but the most important number everybody's focused on, though, is that ending stock number, that total supply minus total demand. And we look at that, it's not much of a change on corn. It would only raise the ending stocks about 13 million bushels, but the big adjustment that everyone's expecting is on the bean side, where they'd bring it up about 104 million bushels.
It's really an important report to see the reaction from Jeff. If somebody wants to follow you on Twitter or catch up with some of your daily market commentary, how can they do so?
You bet. You can just go ahead and follow me at Jeff Peterson 01.
Jeff Peterson, the president of Heartland Farm Partners, joining us here on a Monday morning as we check in with the markets inside the Nebraska Soybean Board Studio. I'm Bryce Duskett reporting.